Hey Dustin, thanks for commenting. To your point, yes, this is part of the reason. Quick Google search tells us that this is a huge part of the reason in that slowdown in revenue growth. A bunch of customers were unhappy with this change and then they unsubscribed. Ultimately, this turned out to be a good decision for the business and they did gain a lot of those customers back. But my point is that you can make one misstep as a company and the stock can get crushed 80%. Some of these revenue slowdowns don't even have to be self-inflicted. They could be macroeconomic. Let's take Amazon, for example. This company was exploding in revenue growth leading up to the early 2000s. The company was crushing it and still continued to crush it even through the dot-com bubble crash. Look at the revenue growth. But then let's take another look at the stock chart and see what actually happened during this time. Many of you will know that the stock crashed 90% and didn't bottom until 2 years later. And then let's look what happened after another several years of explosive growth. The stock recovers, still never reaches its high all the way out until 2008. With several bumps along the way, as you can see, the stock is going up and down and up and down. It reaches $5 in 2008 only to lose all of its gains going into 2009. And look at the insane revenue growth that Amazon was having year over year during this time period. In fact, Palantir has done something like this itself. Let's take a look. Palantir hit a high of $45 per share in January of 2021, only to hit $584 2 years later in 2023. And what was revenue doing during this time? It was growing actually, but at a much slower pace. This is a quarterly, year-over-year change of the revenue for Palantir. There are tons of other case studies of this. Look, I would not be surprised if Palantir hits 200, maybe even 250. As long as they can continue to show this explosive revenue growth and securing big contracts with big names. It only takes one bad decision, one lawsuit regarding data and privacy, a slowdown of AI CapEx spending, a slowdown in government spending, a loss of one of its biggest customer contracts. And then analysts downgrade the stock, and then the shares are offloaded, and then you could see Palantir trading back down at $50 to $60 per share. If I owned Palantir shares at a low cost basis, I'd either sell 25% of my shares at a minimum, or I'd be selling out of the money covered calls at about a 20 or 30 delta to bring in some premium and reduce my cost basis and bring in that income to reduce my risk. All that to say, this is not financial advice. Invest at your own risk, and good luck out there. Be safe.